I'm Kalila Reynolds and welcome to Taking Stock. Merry Christmas, everybody. Many of you are on holiday, but the markets are definitely not. So we're bringing you all the latest business news and telling you how it will affect you and your money. But before we get started, head over to my website, KalilaReynolds.com, to subscribe to our newsletter. And while you're there, you can check out our other financial news and videos. You can click the link up here or in the description box below. Now, come on, let's get this money.
First up, WiPay has partnered with a leading tech bank locally to make receiving payments online in Jamaica a whole lot easier. We'll hear more from CEO of WiPay Caribbean, Aldwyn Wayne. And later, the analysts weigh in on the latest market developments. Another IPO has hit the market. The prospectus for Derrimon Trading Company is out, with new shares in the company selling for $2.40 each, while Key Insurance's rights issue is going for $3.50. We'll find out what the analysts think about these offers.
But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
Distribution company Derrimon Trading will remain listed on the junior market of the Jamaica Stock Exchange JSC despite its spending $3.5 billion IPO. The raise is set to push the company 7 times beyond the limit for the junior market. Junior companies are not allowed to hold more than $500 million share capital. Derrimon will be the exception, but will be paying higher fees that apply to main market listings under the agreement worked out with the JSC. Its subsidiary, Caribbean Flavors and Fragrances Limited CFF, was the reason Derrimon was successful in its pitch to stay on the junior market. DTL successfully argued that moving to the main market would disadvantage minority shareholders of the smaller company CFF because it too would have to migrate. The Bank of Jamaica BOJ has projected that over $190 billion will be in circulation by the end of December. It's expecting more money will be spent during the Christmas season, as is customary. The projection is a 13% increase or $22 billion more than November. However, BOJ says the forecast is below the 5-year average growth rate of 17% for the month of December. Between December 1 and 11, just over $6 billion was in circulation. As at December 11, there was $175 billion in the hands of the public and in the vaults of financial institutions. The central bank says this high stock of currency may be the result of deposit-taking institutions and individuals holding precautionary cash balances amidst the uncertainties caused by the COVID-19 pandemic. Micro, small, and medium-sized businesses are set to receive a $375,000 tax credit every year going forward. Parliament approved changes to the Income Tax Act recently to entrench the tax credit, which was first announced by Finance Minister Dr. Nigel Clark during this year's budget debate. The legislation is part of a suite of government measures over the last 2 years to reduce costs for MSMEs and encourage them to become formal. Businesses to be impacted by the third phase of the plastic ban will have 6 months to phase out those products and restructure. Environment Minister Pernell Charles Jr. said after that the government intends to prosecute anyone in breach. Effective January 1, 2021, single-use plastic bags bigger than 24 by 24 inches and thicker than 2.5 mils will be banned. Single-use plastic drinking straws attached to juice boxes or drink pouches will also be banned. The cost of goods and services stayed the same in November, according to the Statistical Institute of Jamaica Statin. Statin says inflation for the month was 0.6%. It was 0.8% the month before. This brings inflation for the past 12 months to 4.3%, well within the central bank's target range. The highest price movement in November was for food and non-alcoholic beverages, which rose by 1.7%.
What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart. And when we come back, do you own a business and would love to ship internationally, but there's just one problem? You can't get paid. After some bumps earlier in the year, WiPay has now solved that problem. This segment of Taking Stock is brought to you by Bulwark Insurance Agent, insurance made easy, and Massey United Insurance. How good is your insurance? Welcome back to Taking Stock. In this COVID-19 era, doing business online has become essential. Both businesses and customers have been flocking online. There's just one problem. How do businesses, especially small and micro businesses, get paid? This has been a long-standing challenge in Jamaica and the Caribbean. Well, WiPay is making it easier for small business owners to get paid directly to your bank account. They've ironed out the kinks and found a new local partner. Joining us now to discuss, we have CEO of WiPay Caribbean, Aldwyn Wayne. Hi, Aldwyn. Welcome back to Taking Stock, your second time.
Hey, Kalia. Thank you for having me. I'm excited.
How's it there in Trinidad?
Same way we have been for the last 365 days. Sunny. Good.
That's nice. Good. So you were on this program in July, introducing us to WiPay and telling us about, you've been launched in Jamaica, how it's been going up to that time. I know you have some new developments and new announcements. What's new with WiPay?
All right. So WiPay Jamaica, what's new is we've got a new partner, a new banking partner. So officially, at the end of next week, we're going to be in Jamaica providing processing and online onboarding with a local banking partner in Jamaica. So no longer are we going to be a Caribbean gateway. We're now going to be a Jamaican company and a Jamaican gateway.
So during our interview in July, you had mentioned that you were partnered with another banking partner, a major financial institution. What happened with that? So how come you've made a transition? You've made a switch now?
Yeah, man. So for us, being a fintech company, partnerships is very important because we are facilitated by our partners. We are a technology company. However, we still need financial institutions that is regulated within the financial space in Jamaica to play a very important role with our service. And making sure we are aligned, meaning our company and that financial service provider, is very important. So evaluating the different financial players in the market, we have pivoted to the leading financial service or bank that provides technology in the market. And that's the reason for the change from when last we spoke.
Right. So I'm going to be honest with you, though, Aldwyn. So after we spoke last time, I checked out WiPay, sent you guys an email, tried to register for the service because I was launching my website, which was launched in late October. But I didn't get through. I understand that you guys had some difficulties. Tell me what happened, because I had other people reaching out to me as well saying, WiPay wasn't working. What happened?
Yeah, for sure. So when we launched in August, we had that financial partner locally that we were having a conversation with. And that process to get on board or get onboarded with that partner was outside the range or the scope that we have in the rest of the Caribbean. Within the rest of the Caribbean, you sign up for WiPay, you get onboarded within 24 to 48 hours, something that we pride ourselves on. And that financial partner did not have the ability to get Jamaicans onboarding within that time frame. So we stuck a pin right there and then and looked out in the market to find a player that can provide us with that quality of service of having people onboarded for online payments in a matter of 24 to 48 hours without adding an additional fee. So between August and now, we were looking for that partner. And that period is when we went on a little pause or hiatus. And that's when you probably were trying to get on board, or your customers were trying to get on board.
Right.
During that transition period between that initial partner and this new one that we have.
But that delay must have cost you, because this is a time now, COVID, everybody's trying to get online. Every business, every merchant is trying to do e-commerce, and has been a challenge all over the Caribbean for small businesses, especially trying to figure out how to get paid. So how much did that cost you, that delay?
It costs us significantly. So during this COVID period, in all the countries that we operate in, from Suriname, Barbados, Trinidad, St. Lucia, Grenada, Guyana, we saw on an average of about 300% increase during COVID. And Jamaica, being one of the larger markets, put it on pause during that uptick or that period of transition from going from traditional or cash-based services to online. It was very, very tough for us to put our service on pause. But we rather put that on pause than put out a subpar product that we're in one of the biggest markets in the Caribbean, Jamaica. We would have customers saying, hey, we signed up for WiPay, it took us 4 days or 2 days to get onboarded, and then a further 3 days for your bank to onboard us. We rather put that service on pause to get our product to where it is in the rest of the Caribbean. So yes, it did cost us a significant amount of money and time in Jamaica, transitioning from that that financial institution to this new one that we have. But from a customer experience and a customer satisfaction point of view, that's our primary focus. And we have to bite the bullet and make sure that when we do put a product in the market, it's something that is aligned with our quality of service that we provide throughout the Caribbean.
It would have cost you a lot, and that opportunity cost those customers who were looking for that solution right at that very time, because since then, quite a few competitors have introduced their own solutions. And notice other banks have partnered with, like, for example, Figaro, and other things have come into play since then. So I know it's really super important for you to get your message out there right now. So why WiPay as opposed to these other solutions? Because now there are options, whereas a few months ago there was nothing.
So yeah, I mean, that's a really good question. WiPay was created specifically for the Caribbean. WiPay, like I said, I think the first time we was on a call, was birthed in Jamaica. We were in Jamaica in the mid 2010s. And working with a lot of companies who were putting up mobile wallets, banks that were putting up mobile wallets, telephone companies that were putting up mobile wallets. We got a lot of our foundation set in Jamaica, and the company is built for us, Caribbean folk. It's built specifically for us. So imagine building a payment company of international standard, but it's domiciled, registered in Jamaica. So we would be able to provide services that we need, that we expect at an international standard without those international costs. So you mentioned competition. For us, competition would be someone that comes from Kingston 5, someone comes from downtown, someone comes from Mobay. That's competition. In terms of international players, for us and most of our countries that we exist in, we don't look at those international players as competition, because they are here to provide a service that costs us in the Caribbean US dollars, costs us foreign exchange, costs us opportunity cost that's normally reserved for us in Jamaica or within the Caribbean. And that's now being passed on to those international companies.
That would have been true a few months ago when we spoke in July, when the options basically were WiPay, which wasn't fully functional yet in Jamaica, PayPal and Stripe. And so I understand that would have been true then. But since then, we've had local companies partnering with some of the international companies to offer.
It's still international. It's still international. You still have USD and GCT to pay on these US dollars.
So still the transactions are still processed in US dollars?
So all the onboarding and the fees to these companies, they're not going to take Jamaican dollars?
Really?
No. Okay, you mentioned that company just now. Where is it based?
Figaro. I'm not sure where it is.
It's not based in Jamaica.
I know it's not. Yeah, I know it's not Jamaican for sure.
You have to pay them in US dollars, and you have GCT to pay on that. Yeah. WiPay is based out of Kingston. WiPay Jamaica. We pay our taxes in Jamaica. We operate for the Jamaican market. We operate in JMD, not USD.
So how does that work if I'm an exporter and I'm selling stuff? My customers are abroad.
Yeah. So your payments come in US dollars, but the fees and transaction fees you pay, or the monthly fee that you have to pay, would be in JMD because the company that you're managing your services with is out of Jamaica.
Understood. Well, that's a huge advantage, especially with the fluctuations in the Jamaican dollar versus the US dollar and what COVID has done with that. We definitely prefer to pay in JMD than face the uncertainty of USD conversion. But you mentioned fees. What are your fees?
Right. Again, so being from the Caribbean, right, understanding what most entrepreneurs go through to get online. You're trying something in most cases. I mean, you may run, a nail tech shop, or a hairdresser, or, you sell, food at the side in a push cart or the road. You don't know this online space just yet. And for us, we build solutions specifically for those customers. Why would I want to charge you, a nail tech, someone who's trying to get online because of COVID, because I want to take my appointments at a time, $500 US upfront? Why would I want to charge you a monthly fee when you're not sure how your customers are going to react to this? So for WiPay to sign up, there's no upfront fee.
Oh.
There's no cost to get online. There's no $500 upfront fee or no $60 upfront fee. It's free because you are now trying to get in.
Word, I like free services.
Yeah, you try
quality services.
Yeah, man. So I mean, WiPay, as you mentioned, quality. We've been vetted, by international companies, Deloitte and Touche out of Canada. We've partnered with, the largest payment companies in the world, like MasterCard. We have banking arrangements where, large banks, and all these companies had to do their due diligence, had to vet our process before they got on board being our partner. So for us, the reason, again, why we paused is because we have a level of quality that we intend that our product must adhere to. And if our partners in that market is not ready to provide that quality of service, we'll definitely put a pin and pause and find a partner that can do it.
Okay,
that quality does not take away from the fact that we still will put a service, for the underbanked, for the entrepreneurs, free of charge to get on there, because the value is getting online, not trying.
So there's no charge to actually get online, but you do have to make money somehow. So where do you charge? Is it the transaction fees?
So I'm not too sure if you're part of WeDigis here, but we have from government agencies, large corporations, to the average man in the street. So we make money through partnerships and to government arrangements, through corporations that span the Caribbean, larger customers like Sagico, Unicoma, all of those are our customers. So we make monies on those large customers. But when it comes to the individual, we don't charge you for online payments as an entrepreneur. We don't charge you for a setup fee. We don't charge you a monthly fee, right? Where we make our money is the fact that we are a processor and we charge you a processing fee, or the company charge a processing fee for credit card payments. We make a small percentage on that processing fee.
So I see. What's the percentage?
In the market right now in Jamaica, I think the average percent of processing from some of our competitors is about 4%, all the way up to 5%.
Right. I did an interview with another one recently. It was 4.5%.
Exactly. WiPay only charges 3.8%.
Nice.
And out of that 3.8% is where we make our money. So we don't charge you onboarding. There's no one-time $550 onboarding or $60 onboarding. There's no monthly fees. You just literally set up for free, get your plugin. So if you use a WooCommerce site, if you use a Shopify site, you could go ahead and get the plugin, add it to your website, and you could start selling as soon as tomorrow, and you haven't paid a penny.
So I'm gonna have my web developer for KalilaReynolds.com get in contact with your team, because we've been using PayPal, and the difficulty with PayPal is you can't remit to Jamaica unless you have a US account. So WiPay solves that, and you have no monthly transaction fees, no monthly flat fees.
No monthly fee.
So if
You
I
can
am
start
doing
processing.
small volumes, this is perfect, because if I'm not, for example, my website, I sell T-shirts and masks on my website, which is a very small part of my business. It's fairly small volumes, and it doesn't justify a large monthly fee. So you only pay me based on the processing fee per transaction.
Correct, is right. So
Perfect.
for small merchants who probably generate, let's say $20,000 or $100,000 a month,
Right.
it's very difficult to tell that merchant, hey, for this service, you need to pay $500 upfront or pay a monthly fee of $60 for this service.
US.
That cuts into profit. So using WiPay is free, and it settles into any bank account, which is something I think I need to point out. We don't require you to get a specific bank account. You don't need to go to Bank A or Bank B or Bank C.
I was going to ask you about that, because you said you do have a banking partner. So I don't need to open an account with that specific bank. You can remit to any bank account? Any
bank account. Once it's a bank account within the banking system within Jamaica. Correct.
So where does your banking partner come in?
He settles the funds.
What's their role?
Their role is they're the fiduciary owners of the funds or the transactions. So let's say you bank with Bank X, and my banking partner is Bank Y. They would process the funds at 3.8%. It's settled into Bank Y, and then they do an ACH transaction straight into your bank account at Bank X. So you have nothing to do.
Lovely. And how long does this take before I get my money?
ACH. So ACH is normally 24 hours in Jamaica. It may take 36 depending on the bank, but basically it's 24 to 36 hours. Way faster than PayPal. It would take some money.
Yes. All right. I'm definitely going to be checking this out, Aldwyn. You mentioned WeDay. You had your WeDay event. I saw it on Karen Rose's channel. Tell me what WeDay was and how that went.
So WeDay is our annual event. So we're about 4 years old now. And every year we put forward, it's like a event that takes place that displays what WiPay have done in the last 12 months since the last WeDay. So this year during COVID, we had a lot of things happen, partnerships with a lot of government agencies, state agencies, so we showed our partnerships with the government of Guyana, the government of Grenada. We had a project in Jamaica with RADA and the New Economy Task Force where we did the cashless farmers market. We had projects in Trinidad, projects in Barbados. So it was highlighting a lot of the things that we've done during COVID to move the Caribbean forward in the new digital economy.
And what's WeShops?
So WeShops is a new product that we launched at WeDay. Looking at, the last 6-7 months of customers now who are trying to transition to that online space and don't have the necessary knowledge of a Shopify or how to use a Shopify or how to use a Wix or how to use Equid. They want to just point and click in Jamaica or in Trinidad. So what we have done, we've built out a platform that just like a Shopify, just like a Wix, you could just drag and drop images, create a header. You could build out your entire website in 5 minutes. And that website would have a payment gateway attached to it, WiPay, that will allow you to start selling your T-shirts, 24 hours later. And all you need to do is upload those images of your T-shirts straight into that WeShop site that you would now own, and that money be processed into any bank account that you have in Jamaica. So you could create your entire online presence with e-commerce processing within a matter of 24 hours with WeShops.
Perfect. And there's a cost to this?
Yes. So although WePay and payment processing is free, because we're going to be hosting your website, hosting your data, PCI storage, DSS storage of your information, there's a cost that we pay to our hosting provider, just about $29.99. And that's for hosting your website and managing your customer and CRM information. But the payments is still free.
So the $29.99 is a monthly fee or a one-time fee?
That's the monthly fee if you're hosting with us. Now, if you already have your website and you already have your partners that provide you CRM or management service, WiPay is still free and will always be free for payments.
Well, that would have been low-hanging fruit for you, no?
Yeah.
You saw that opportunity and you seized it.
Of course. So for us, looking at the market, we provided payment processing for free. And the uptick in some of the islands was not there because they didn't have the ability to pay some of these foreign companies because they didn't have a credit card, right? So let's say I'm using, Shopify or I'm using Wix. You still need a credit card to pay these companies their $30 or $40 a month.
Right.
I still need a credit card to pay Figaro their $40 a month, right? We Shops is a Jamaican company. So although we are charging you $39, we're going to take that money in JMD.
So how do people pay you if you don't need a credit card?
Right. So when you create your We Shops account with WiPay, you could, let's say that monthly fee is $30 US or the equivalent in Jamaican dollars. That money is taken out via the transactions that come through the account. So you don't need a credit card to get started up with We Shops.
I see.
You never would need a credit card.
So basically, you have credits to your accounts because you're selling stuff using the website, and so you just take out your fee from there.
Exactly.
But suppose I don't have any transactions this month. I didn't make any sales this month. How does somebody pay you?
Then you go to your local bank and do your transfer in Jamaican dollars.
So you just do a funds transfer.
So again, this is for the everyday man. This solution is not something that we're trying to bring wholesale from some foreign company that they understand or they have credit card payments. This was built specifically for Jamaica and the Caribbean, where we know we have customers that do not have credit cards. You may make the best Scotch bonnet pepper sauce, but you don't have a credit card, but you want to sell this to people in New York. Create a We Shop site, sell your pepper, and when they pay you, that $30 equivalent comes out and pays for your shop. You have no transaction this month. You walk into your local bank and do a transfer to WiPay, which is a local company in Jamaican dollars. So you don't need a credit card ever to use We Shops or WiPay.
I think that is the line right there. You don't need a credit card ever to use WiPay or We Shops in Jamaica. That's a critical line because so many of our people are underbanked, and even those that are banked, many don't qualify for a credit card. If you have a small business, it's really difficult to get a business credit card. You have to get the credit card in your name. So there's that other hurdle. How many years has WiPay been around now, Aldwyn, in total? What year?
For 2016.
4 years. You've made strides, you faced challenges. Here on this program, we talk a lot about the stock market. Would WiPay ever consider listing on the stock exchange, whether here in Jamaica or there in Trinidad?
It's funny you mentioned that. Actually, a year today, we were in Jamaica in Montego Bay. It came up on my Facebook timeline when we made an announcement that we were going to list on the Jamaica Stock Exchange or the Junior Stock Exchange. We were at the Tech Beach event in Montego Bay, an event that Kirk Hamilton puts on.
I'm aware of it. That's with the IDB, right?
Yeah. So last year to this day, I think it showed up on my timeline on Facebook, where I was actually on one of the pages on Observer or Gleaner, one of those. And we were talking about being listed in 2020 on the Junior Stock Exchange.
Well, look, 2020 has been rough, so I don't fault you for not meeting that timeline. What type of timeline do you have now? Are you looking at next year?
Yeah, so we would do next year. I mean, we were still going to do the launch. We're still going to do 2021, but we took a decision not to do it because we were experiencing rapid expansion. So with COVID and our explosion in usage because of COVID, it would make for a better prospectus in 2021, given our COVID numbers in 2020.
I hear you. I hear that for sure. But you wouldn't cross-list on the TTSC?
We're giving it consideration, but we're primarily focused on the Jamaica Stock Exchange.
Yeah, I know there's not a whole lot of activity on the Trinidad Stock Exchange. The JSC is where it's at right now. I don't blame you, Aldwyn. Come where the money is.
It's been where it's at for the last 3 years. So
yeah. Well, thank you so much. The things you've said today are very exciting. I'm looking forward to go testing them out for myself.
Try it out. It's a new platform since we last spoke.
Awesome. Thank you so much. Bye, Aldwyn.
Bye. Thank you for your time.
All right.
Merry Christmas.
Up next, we've got your market recap, and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agent, insurance made easy, and Massey United Insurance. How good is your insurance?
Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange declined, with the combined index losing nearly 1%. 101 stocks traded across both the main and junior markets of the JSE for the week ending Friday, December 18, 2020. 46 advanced, 44 declined, and 11 stayed the same. 156 million shares changed hands on the Jamaican dollar market, totaling nearly $1.8 billion. Mailpack Group traded the most, taking up 29% of market volume. The stock lost 5 cents to open the week at $2.40. Wigton Wind Farm ordinary shares traded the second highest, with people buying and selling nearly 18 million shares in the company. The stock remained the same to open the week at 74 cents. Trans-Jamaican Highway rounded out the most traded, taking up 11% of market volume. The stock gained 1 cent to open the week at $1.30. Now let's see who had the biggest gains. 1834 Investments jumped nearly 20% to close last week at 98 cents. CAC 2000 rose nearly 19% to close last week at $10. And Radio Jamaica's stock advanced nearly 17% to open this week at $1.27. On the losing side now, Epley 8.75% preference shares due 2023 fell nearly 31% to close last week at $6.14. Siboney Group fell 18% to end last week at 18 cents a share. And Margaritaville Turks USD lost 15 cents, down to 11 cents USD. Market recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments.
This segment of Taking Stock, The Analysts, is brought to you by Jamaica Money Market Brokers and Proven Wealth. Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. I'm joined by investment analyst at Proven Wealth and Prime Minister's Youth Awardee for Leadership, Julian Morrison. We also have Assistant General Manager of Trading and Treasury at JMMB, Greg Lindo, and business writer at The Observer, David Rose. Hi guys, how are you doing?
Hey, Kalila. Good to be on.
Congratulations, Julian. I see you shining bright. Prime Minister's Youth Awardee.
Yeah, man. Thank you very much, Kalila.
That's why I have on spectacles this morning, because the light is blinding you. You're too bright now.
No. I just got up from my desk. That's why.
Well, we love to see it. We're all very proud of you.
Thank you, Kalila. I appreciate the support, man.
Well, the market is back on fire. It looks like everybody got approval from JCSD same time, and all these offers are hitting the market same week. So SYGNUS opened on Friday. We have Derrimon's prospectus that came out. Key insurance rights issue is out as well. So Greg, let's hear your assessment first. Let's start with Derrimon.
Well, the Derrimon transaction has been some time in the making. It's a large transaction when you consider that they're looking to raise up to $4 billion with upsides, considering the market cap of the company. But the company has been doing pretty well, solid fundamental. They've been growing, making acquisitions. And I guess given this environment, they're trying to raise capital to expand. So it's definitely a good position for the company to be in at this time. And I do think that they have done a fairly good job in terms of managing the business, especially throughout the COVID
But
period.
what about their debt, Julian? They do have a very high debt to equity ratio. Does that concern you?
Well, based on where debt to equity is, it's not alarming the last time I looked at it. And the good thing is they are in a low interest rate environment, so they can borrow cheaply, and that will give them the financial flexibility to grow fast and to pay down the debt faster. Because as Greg said, the company has solid fundamentals. Their sales are growing. They have been widening their footprint. And right now, they're essentially raising capital to reposition the business so that it can manage all of these growth plans better. So within the context of all of those things, the debt is definitely not alarming.
And they do plan to use some of the proceeds of the APO to pay down some of that debt.
That's right.
David, what's your take on the Derrimon APO? It opens January 6th.
So I mentioned a while ago about paying down debt. So part of that debt that Derrimon has, some of it's actually preference shares. So you have preference shares which are used sometimes as a part of ownership control and so on. But in the case of Derrimon, it was a means in 2014 and 2018 to basically help grow the business faster and provide working capital. So they have a preference share that is going to be redeemed in March for $350 million. And then they have other parts of debt, which was used to help fuel the business. Because if you remember, once you get the equity money, either you're going to make more money by operations or you're going to borrow somebody else's money to further grow the company. The two acquisitions that they're planning to target in the US is pretty interesting for the context that Derrimon were converted to 150 rate, 150 to 1 GMD to US. It came up to about $7.4 million, split up between those two acquisitions. And Derrimon said even if they don't acquire those two companies, they'll still acquire a company within the 6 months of the APO closing. And a key thing people need to remember with this APO, that APO is technically open and shut already, because it's fully underwritten by Barita Investments Limited, who is a sole lead broker and arranger for the offer. So the offer is fully upsizable to $3.5 billion. So it's already basically open and shut already for Derrimon. So really and truly, it's just to see how the market and who else will be interested to take up this offer. As I pointed out earlier, sorry, fundamentals, they have CFF, which is another listed company in the JSE, Caribbean Flavors and Fragrances, Woodcats, they have Select Groceries in Manor Park, and they're, Leslie's largest sub-distributors in Jamaica. And part of that overall APO race will be going to actually expand to Clarendon. So Derrimon actually, as I would say, has several things going for it. And the good thing about it is Derrimon's stake in CFF technically is what the JSE said was the main factor for them being allowed to stay in the junior market. So when I read Friday's paper from the Gleaner, I read that.
I was just about to ask about that. Yes, because I noticed indeed that they are, even though they are going to exceed the $500 million allowed for the junior market with this APO, they're being allowed to stay on the junior market. So explain how they were able to achieve that, to get that approved.
So there are two rules basically the JSE has with respect to the junior market companies. On the initial admission section, you have the part that speaks about, the company cannot be an associated company of a company on the main market of the JSE or in the stock exchange. And then under the eligibility to remain a junior market company are listed, it speaks to, the company maintaining that particular requirement. So according to what the article said, and even from my interpretation of the rules, is that if Derrimon was forced to move to the main market, it would in turn hurt CFF, which is listed in the junior market, and would potentially be forced to move to the main market as well. Because remember, they told them it's at the same period, interval basically. CFF is in October, Derrimon is in December 2013. And that was just before the cut-off period for the overall tax break. So right now they're under the second phase of the tax break. And remember, 50% remission on your overall taxes is still a good saving grace, because that's money you can pack into the business. So basically what they were saying was that if Derrimon went to the main market, CFF would end up in problems in relation to the eligibility to remain listed as a junior market company. And they didn't want to hurt the shareholders.
Is that a problem that the JSC needs to address, that discrepancy?
Well, it was the same issue with Key Insurance, if you recall, right? When Grace took a majority stake in it, they had to migrate to the main market, right? So in terms of the rules, of course, raising this amount of capital would be in excess of what the junior market is allowed for. But I guess at the end of the day, the JSC would have to maybe take a look at it to see if they can allow maybe for some relaxation. I don't know. But then there is also the other side of it to say, well, if you are growing, I mean, the junior market is to enable you to grow. Once you outgrow the bounds of what that market is, then you by right really should migrate. And should you still get the tax benefit if you've already used the capital to grow? So, I mean, it's a debatable topic. I'm sure that the JSC probably would have maybe gotten some inquiries on it as to what they choose to do. We'll see down the line.
But would they get to keep the tax benefits of being on the junior market, though?
Yes. So the rule, okay, so it's basically two parts to the rule with respect to the breaching the share cap. So you have to get permission from the JSC in order to remain in the junior market. And instead of paying junior market listing fees, they pay main market listing fees, which is basically like $1 million more when I checked it out based on the company's market capitalization, which is very minuscule compared to the amount they're raising. But if the company did not get that permission from the JSC, they would have had to actually migrate basically to the main market. So that's the thing about it. So they get to keep the tax break because they're sales in the junior market, because the rule itself, with respect to what's entrenched in our legal framework, so that you have to be in the junior market and not be delisted to benefit from the tax break. So the fact that they're still going to be in the junior market means that they can keep a 50% tax remission. So see if acquisition technically did help them a couple of years down the line later now.
Interesting. Very interesting. So, Julian, does Proven have a position on Derrimon just yet? I know the APO is still fresh.
Well, we don't have an official opinion just yet. It's still under review. But what I can say from a bird's eye view is that I've been looking at Derrimon personally for some time, and I do believe that it's a company that is very proactive in building out its framework. They have diversified their income streams. They've been looking at different channels of value creation. And a lot of this was highlighted by what David said earlier. But in addition to what he mentioned, Sampar's cash and carry is a very strong value play for them in that it helps their distribution legs to run across the network in Jamaica. It helps their goods to move quickly. Because Sampar's, as you know, is very focused on a certain type of audience. They have a niche that they pretty much dominate. Middle to lower income individuals who consume certain products in high volume. So it helps the turnover of their inventory very quickly. So I have confidence from that perspective, but that's my personal opinion.
And Greg, from JMMB's point of view, any position just yet?
Not that I'm aware of. I know our analysts are looking at it right now. So in the coming days, we'll probably have an opposition. But as I'd mentioned earlier, Derrimon has been pretty strong fundamentally. And I think given that the use of proceeds which they've outlined for this transaction should accrue positively to shareholders. So, I do think it looks attractive, but of course, more has to be done in terms of vetting through the prospectus. But on the face of it, it does look like a good transaction for them. And the fact that they've gotten underwriting, pretty much guarantees that they will, they will get the funds. So it's just a matter of do they get the 3.5 or do they upsize to the 4? And in any case, if it should be successful for them to move forward.
Now, you mentioned another company recently. You mentioned Key Insurance, and so they have their renounceable rights issue as well. That opens. When does it open again?
Next week, Wednesday, the 23rd. Sorry, 23rd
right, just before
December.
Christmas, the 23rd of December. So Key Insurance shareholders get the right to buy new shares in the company. And I believe they have until the 6th of January or sometime early January to renounce that right, which would allow members of the public to buy it. What's interesting here is the share price for this offer is just $3.50. And Key Insurance has been trading between $7 and $10 band over the past few months. So, David, let's hear your take on the Key rights issue first.
Well, here's the key thing about that. Key actually, for the rights issue, even though it's renounceable, it's not necessarily renounceable to the public. So if you actually went through the circular, it says that even though it's renounceable, it's going to go to a pool for shareholders who are on record or actually want to take up more in terms of buying more shares in the company and actually buy into Key. So in prior rights issues, and I said, this isn't all rights issues, people would just, get that option. So for Kingston Properties, there was an option for the public members of the public to buy into the rights issue in that case. And as I said, prior rights issues had that similar stipulation that members of the public could have got in. But in this case, you can only renounce other shareholders. Or if you don't take up your rights, then somebody else just gets it. And the thing about this rights issue is that, unlike in the past, where it's probably like 1 to 3, where if you own 3 shares, you get 1 new share in Key. In this case, every 500 shares you own in Key, you get 259 new shares basically allotted to you, which is a relatively it's about 2 to 1 when you do the math, but it's a pretty interesting way they structured it compared to the past. And the thing is, GK is not going to necessarily be raising the larger band I thought they would have raised for the rights issue. As I said, $50 is currently the right issue price, and it's trading around like $7 to $10 right now. And the GK, they're going to raise about $670 million for the company through the rights issue. And at the same time, the Key rights issue as well is underwritten by GK Capital Management. And GK themselves have said that they're going to take up their rights back at their AGM. So for Key, really and truly, just like Derrimon is already open and shut. But you need to see how much further the confidence the shareholders have in the company right now.
Interesting. So I didn't realize it's not open to the public. So this is limited to a very specific pool of shareholders already. But Greg, Key Insurance stock price has been on the move for the past several months, ever since the GK acquisition. Why do you think that made such a difference in the share price and investors' confidence in this company?
Well, as you know, Key has been struggling for quite a bit of time, right? Since going public. And we've had the leadership change the management and ownership change at the company. So I think the market, given Grace's success in the insurance segment, has been pretty bullish on the price. Maybe a little bit over exuberant on the price, because at the end of the day, Key is a company that is in a pretty precarious position. I mean, they've reached their minimum capital ratio, which is a significant regulatory ratio for insurance companies. So this rights issue is really to shore up that capital so they can continue to be viable. So I think that, given where the share price is, yes, the market has a lot of expectation for the company. The rights issue price probably represents something more in line with what the large investors would probably want, because they're not just going to pick that $3.50 price out of a hat. They're going to probably look at where the company is fundamentally and what valuation actually makes sense for large investors to be approached.
Such as GK themselves, because they would be diluted, so they would be buying up a large stake in this rights issue, wouldn't they?
Yeah. But do remember that when GK took over the company, I think they paid like $2 or something like that. So I mean, it's they are already starting at a pretty low average cost, although they are accounting for it as a subsidiary. So paying closer to market at this time probably wouldn't make much sense from a valuation perspective.
Julian, anything you wanted to add on Key before we move on?
Well, it's going to be interesting times ahead, because general insurance is a very competitive space. I've seen other players saying their management discussion and analysis that even though COVID resulted in less cars being on the road, there's a finding that accidents are actually more severe. So the payout in some cases is actually higher. So even though the frequency of accidents might have pulled back a little bit, it hasn't helped claims because of the magnitude or seriousness of these accidents. So in terms of the claims environment, the low interest rates, the emergence and retention of high levels of competition in the same space and the same network, it's going to be challenging. But with the support of GK and the fact that they have that competence in general insurance, it should be able to help them to create value. So it's a double-edged sword, and we have to just keep watching it.
So let's turn to the regional markets a little bit, because our guest this week actually was WiPay, which is headquartered in Trinidad and Tobago, and WiPay Jamaica. So all of this is linked. So they're having some foreign exchange issues, David. What's happening in TNT?
Well, just before I get to that, when Juno was talking about the claims with respect to insurance, Sharon Donaldson, who runs General Accidents, said that another factor that was increasing claims was even the increase in the FX rate. So when parts were coming down to Jamaica, they would end up costing more as well. In the case of Trinidad, their problem right now is that FX inflows have severely been shot. So Trinidad really and truly is mainly focused on commodities. This in Trinidad really and truly the economy is focused on oil. And when there's been a significant fall off in terms of demand for oil, they only supply about less than 1% of oil to the world market. So there is much pay for them to compete. And right now, Trinidad borders are still closed. Jamaica opened back from June, called about 3 months we were closed. Trinidad just said, hey, you just keep yourself out there. We'll just figure our way out here in Trinidad. And it's pretty crazy down there now because even Scotiabank Trinidad has said that they've had to cap the restrictions on business credit cards, $500 probably triples a month or a day. But even so, to be restricted that much in terms of unit FX, US dollars, it really constrains the ability of the business to operate. So in that same article, they talked about, 1 in 4 businesses might potentially shut down because of the FX situation. So imagine you have to order your goods from probably your supplier in the United States. How are you going to pay them? Trinidad dollar isn't necessarily a currency that's interchangeable outside of the country. And you're talking about an economy that FX controls, which limited the ability for FX to move in and out of the country. And you are pretty familiar with the PEG, or I should say FX controls back in Belize. So you know how difficult it can be to, do business sometimes or even move money. So for Scotiabank Trinidad, their results came out recently, and with the rest of the Scotiabank Caribbean territories, and they fared a little bit better compared to Jamaica. 22% decline in overall results. Fourth quarter was up, but it's probably going to become more difficult for them in the market down there because just JMB operates on Trinidad as well. And if the country is facing a severe FX problem right now, and borders are still locked, and you're seeing this overall still contraction in the overall economy, it's not going to spell pretty well for them. And people have to remember that Trinidad has a lot of, I shouldn't say exposure, but stakes in Jamaica. So Trinidad Cement Limited owns Carib Cement here in Jamaica. Guardian Holdings owns Guardian Life and General in Jamaica. So we shouldn't neglect Trinidad from one perspective because you probably just might see some more transactions happening here in Jamaica through the subsidiaries to support companies down there in Trinidad. So we should really and truly keep an eye on what's going on.
We definitely want to keep one eye open for our neighbors over in the East, indeed. All right, so looking further abroad, Julian, Pepsi released its results for the 9 months of the year, unaudited financial statements. What's Pepsi's results showing?
Well, Pepsi is currently showing a slip in net profit. So they're down 4.92% to 5.28 billion. But the good news is that revenues are up 3% to 47.92 billion. And the issue is that operating costs creeped up. So their operating efficiency went down a little bit. The good news is, from a balance sheet perspective, even though they've borrowed quite a bit, so their debt has gone up about 78%, their cash levels are very good. Their cash levels have gone up 69%. And their operating cash flows are up 21% year over year. So overall, the business is healthy, even though they've been borrowing more and their expenses have gone up a bit. The thing is that They have been facing significant logistical issues because of the COVID-19 fallout in terms of the movement of the goods. And when I say significant, I mean relative to prior periods. And to put some more color on it, there are no more sporting events. Well, I wouldn't say no more sporting events, but the level of sporting events have gone down significantly compared to prior periods. There has also been a squeeze on entertainment, and those are two major drivers for Pepsi's product portfolio, even considering that Pepsi actually owns Gatorade and some of these goods that are closely linked to entertainment and sports. But to put all of that into perspective and give it a 360-degree view, they've done well. They've done well. For all of that to happen and for profit to be down less than 5% year over year, that's good. We're looking forward to their full year results, which should be out shortly. And I think that most of the value is definitely from the dividends. The price is in the neighborhood of about $145. It trades on NASDAQ. And I would say that the PE is a bit elevated. A lot of people follow this stock. So there are a lot of institutions that buy into it. So the price level is relatively elevated relative to the earnings. But in terms of income, investments right now are giving low yields. So it's a good place to look in terms of dividends if investors want to go there. Dividend yield is about 3%.
All right, good stuff. So you guys over at Proven and JMB, you are selling agents for these offers hitting the market, SYGNUS and Derrimon?
We are selling agents for SYGNUS.
Okay, and JMB?
Yeah, we're selling agents for both offers.
Okay,
Yeah.
so check out IPO Pro and check out Moneyline.
Yes.
Get your orders in early. Thanks, guys.
Yeah, man.
Thanks, Kalila.
This segment of Taking Stock, The Analysts, was brought to you by Jamaica Money Market Brokers and Proven Wealth. That's our show for this week. Thanks for watching. Make sure you like this video, subscribe to this channel, and share with a friend. Also subscribe to our newsletter at KalilaReynolds.com and turn on those post notifications so that you can be the first to see all of my other features. We want to help people learn more about money so we can all get this money together. This week on Money Mondays JA, I've got your last minute Christmas savings tips. And on Money Moves JA, Chris Record from T-Tech is back to explain what you need to do to get your business ready for the new Data Protection Act. This may surprise you, actually. Follow me on Instagram and Twitter at Kalila Ray and follow at Taking Stock JA on Instagram. If you want to connect with the analysts this week, check the description box below for their contact information. Also visit our website, KalilaReynolds.com, for financial news you can use however you like it. Watch, listen, or read. Now tell a friend about Taking Stock. Investing is the new sexy. So let's make it cool to talk about money. I'm Kalila Reynolds. Merry Christmas.